right, good morning, everybody. Good morning. This is let's get started a minute early. Just want to welcome everybody. Make sure you jump in the chat and let me know if you're brand new or anything like that. Love to welcome you. You do have to be a subscriber, so make sure you hit the subscribe button. And while you're there, you might as well hit the alert with the things to get notified every time I go live, which is every morning. Plus, I give you a twofer on Tuesdays. And coming up later today, I have a link if you want to come join me at 1 p.m. I am a guest on another event right there. You can go register and come visit the event. So I'm gonna do a new presentation with a new person I haven't worked with before. Come find out. Anyway, yeah, so let's jump into everything today, shall we? As always, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I may be full of crap, as we all are. This presentation, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument out there or anything else. So don't buy crap, financial instrument or otherwise, if you don't know what you're buying and you're not sure about it. And if you need some personal financial advice about it, hire and consult a financial advisor. Yeah. All right. So, loans are a problem. Let's talk about it. Right here. So, give you into a premium article. So, our economy, the U.S. economy, I'm in the U.S. I know other people out there around the world, welcome. But anyway, the U.S. economy grinding to a halt as loan demand and sales crater in the aftermath of the banking crisis. And really, it kind of started before we actually saw the banking crisis hit. So over a month before Silicon Valley Bank collapsed on March 9th, sparking the deepest U.S. banking crisis since the Lehman Brothers, we saw some stuff happening, all right? And here's kind of the roadmap of what's happened. If you want this article, let me know in Discord. I'll put it in a PDF and drop it for you. Anyway, lots of stuff, lots of events kind of happening in here. We have Credit Suisse shares dropping sharply and CDS spreads widening overnight on March 15th. Of course, we had the SVB crashing on March 9th. And this thing just keeps rolling right out to the end of March. Go back. And we have tightening of standards. All right. These are domestic respondents who are tightening standards for loans of large and medium size, small firms, consumer credit loans, construction and land development loans, new and used auto car loans, multifamily residential loans, non-farm residential loans. All of these are on the uptick with tightening being reported by domestic, which is U.S. respondents. These are institutional respondents saying that they are tightening the standards for loans. We were kind of loosey-goosey down here, and now we're getting really tight. We were tight in October, or in COVID. That was a spike over here. It was like a sudden tightening, then a loosening. Now we're going tight again. All right. What does this all mean, right? Like, JT, what does it mean? Well, our financial system is built on money moving, right? I mean, that's what we do. That's why you're here watching this. Money moves. The money has to move to make the stocks move, has to move to make the economy move. Money's always moving. That's how we make money on it, is it's moving in the stuff, out of stuff, here, there, the other. That's why the news events around a certain stock may not matter as much as how the money's flowing. And that's why technical analysis that I use works particularly well. At least I've found it to work really well and give me the edge to predict things. That's kind of why we are where we are. So, banks with less than $250 billion in assets are responsible for roughly 50% of the U.S. commercial and industrial lending. That's why they're the new target of regulation. Those 100 billion to 250 billion right there. 60% of residential real estate lending, 80% of commercial real estate lending, and 45% of consumer lending. Now, the big statement in here, 80% of commercial real estate lending. That's important. That's why yesterday in Discord I dropped the trade on ARE. And I'm going to talk about that here in just a minute. I'll pull up the chart and talk about it. So, commercial real estate, CRE, is potentially the next big problem. And I talked about that a couple weeks ago when I pulled up the amount of billions of dollars that are going to have to be refinanced. And right now, it's not an environment that's friendly for refinancing commercial real estate. The rates are higher. People didn't plan for rates to be higher when they got to the end of their loans and needed to refinance. This is going to create a jam. And as we just saw on this chart up here, many institutions are reporting tightening of the standards. So when you go to refinance, you're going to have to meet stricter criteria to refinance. This is going to create a problem in the commercial real estate. I see it coming. It's just a matter of time. And I think it's going to be later this year, maybe 3 to 5 months. We're going to see. I put on a trade out to the end of the year, and I'll talk about it. So anyway, this is also important right here. Global syndicated loan sales. This is like when your bank packages up and resells the loan. Like your local, you go to a credit union or whatever local bank, and you get your loan. Then all of a sudden, you're at Chase with your, sending your house payments to Chase. I was like, what the heck happened? I thought I borrowed from the local guys. Well, they packaged up your loan with a whole bunch of other loans and sold them to the big banks as an investment. That global syndicated loan sales has fallen to the lowest level we have seen in 13 years. All right, we got the U.S. still kind of rocking the major. And we're back to levels we saw during COVID on loans. Europe, very, very tiny. The smallest it's been in years and years. Asia, a small contraction, not a ton. Canada, almost non-existent on here. Middle East, almost non-existent. And Latin America doesn't even show, just like Canada. So U.S. pulled back has pulled way back. Still moving some loans, but, globally, look at this is the lowest level on here. And as the headline says up there from Bloomberg, lowest level in 13 years. All right. This is the economic powerhouse that drives us. And if this thing grinds to a halt and stops, the money quits flowing. That's important for the stock market because the stock market needs money flowing to be able to go up. All right. So S&P 500 3-day chart, just kind of hanging. We haven't retested these highs yet. We're above this. That looks positive, but we may need a little retrace before we can break on higher. Above here, next target, 4,300. That resistance right there. We get above that, we're probably headed up here to about 4,500. We may just blast right on up there. Not sure yet. Depends on what happens in the next couple of days. We do have CPI, PPI coming out next week. That can be a big market mover. We could get a retrace again, or we could just blast off. All right. So these are some things to keep in mind as we head forward into the new week, next week. ES just chugging in this channel right here. Or overnight, which puts us right over here, is still just sideways to slightly down. Non-committal, we may go retest the bottom of the channel. That's hanging out right around 4,100-ish, 4080, 4090. We do have that pivot right there at 4087 that we may go touch. The monthly pivot all the way down around 4040. And these are ES prices, not S&P 500 prices. ES slightly different by 30 points or so. S&P about 30 points below ES, that is. What is ES? S&P 500 futures. If you're brand new, haven't heard me talk about ES before, keep an eye on this because it moves overnight. Whereas S&P 500 stops, pauses overnight, and then reopens. So, all right. That's kind of that. And looking at the simple S&P 500 chart. Whoops, I didn't mean to close that. There we go. Simple S&P 500 chart. We're just kind of parked. Find a little resistance breaking out of the box here. Yesterday, little baby pullback. I'd love to see this pop and get well above this right here. Somewhere up in this 4,200 area. Make me feel a lot better about reaching up to 4,300. I mean, right now we can just retrace a bit back down to 4,000 even. So that's where we are on the S&P. S5FI saw a little bit of pullback yesterday. I need to go back. Here we go. Pop over to this chart and pop over to the morning monsters. Right here, S5FI, take it out of the log mode. Got a little pullback yesterday. So S&P 500 stocks were pulling back more than some of the other things. So we got right up to the 50 and pulled back. A little bit of chop as we go higher is typical. You know, we look back in the history here. I thought we were going to stay up here, but we pulled back. So apparently we did this part and we've done this part. We may be on the path to do this part next. All right. So I'm kind of using the analog of 2020, the crash. Since everything is about as bearish as it was back there, we got this little compressed chop right there. You can see I'm kind of, that circle projected right over here. We kind of did it quickly. We dropped to the bottom. Now, are we going to chop in here and then get a prolonged period at the top as we go higher? I don't know. We'll see. That's kind of what I'm thinking. That's my theory. My working theory right now is that we're right. We're coming off of this and we're basically right here. We see it spike up, dip down, and then we can get this prolonged period of rising prices. And that can carry us out the rest of this year into next year before we roll over big. All right. Keep it in mind. It's kind of what this, you know, I try to use all the little metrics. Anyway, S&P 500 coming up to the resistance yesterday. Right close. Came up actually just a tad short of hitting that resistance line and pulling back. I think it may consolidate a couple days and then break through, similar to what we saw on NASDAQ right here. NASDAQ leading. This may be what we're doing on S&P right here. Zoom it up a little bit. This little consolidation we had for a few days and then we popped. That may be what we're doing right here on ES. Consolidate a couple days and then pop. And then Russell right back into the blue box. I was hopeful we were going to break out. We came up right to that black line. These support resistance lines, they matter. And then we rejected right back down into the blue box. Not overly bullish still on Russell, but this Russell has a big opportunity to catch up. Now, IWM, seeing a little gap down overnight. Keyboard, man, what's going on here? Little gap down overnight and may have the opportunity to rally on the market open. DXY also pushed below resistance yesterday, getting a close down here around $1.50. And today, chopping a little bit, but we may drop out. We get below this, below 100, we're for sure going down to the mid 90s. You know, all the way down here around 97 at least. Yeah, I've been predicting that since, what, back here in February. So we're probably on the path. Just took us a little longer, kind of like the big S&P 500 chart. It took us a little longer to find that retest of the downtrend, and now we're on the way higher. All right, looking at stuff actually moving today. We have PLTR, get a nice little pop. Still pre-market for another 2 minutes. Looks like we've got resistance up here around 10. That one can break out and go. I am long-term bullish on this, looking for a pop up in this $12 area, you know, 11 to 12, potentially, maybe even up into this 14 to 16 area if it can get above that resistance in here and in here. Probably going to retest those zones. Those are highs from back here in April of last year and in July of last year. AUPH looks like getting a little just chopping here, trying to work higher. Does have some resistance built up right here where these highs are. It's probably gonna go test. That's a pharmaceutical, so be careful. They can just move and not make any sense on drug news. AI got smacked yesterday. Probably gonna come back and test the roadmap line. Continuation lower, looks like. Needs to come back and test the roadmap line. I mean, it got up to the 1272. What do you expect? Like that's all I would expect. 33 and then retrace back to the roadmap line. Google, working on getting a breakout here. We get back above 109. It's probably going to head up to this 123 area. That's one that I am watching, and I keep talking about going to get into a long position. I have not yet done that. I'm thinking about it. Seriously thinking about it. When, I'm not sure when yet, but seriously thinking about it. Looks like the market's open. Maybe push higher on Google. Has opportunity to catch up to its friends Apple and Microsoft. IONQ, get a little pop. Looks like it's going to retrace back down a little bit. Not a huge pop, just a little pop. And we have resistance right up here around 860. UNG showing a little baby pop, but that sucker is decaying. Be careful on that one. NVIDIA getting a little retrace. At some point, it's going to do a bigger retrace. I cannot urge caution enough here. Having resistance at this area. It has the potential to pop on up to 330 area. Right now, we have lots of resistance built up in here. All right, right up in that 330 area is where it topped back here in 2021. We topped right here in 2022, and that's right where we're finding resistance right now. A pullback, an extension. And that happens to be the 1272 and 1618 levels right in there, right where we are. I don't have them drawn on this chart right now, but that's what we got for, let's see. Oh, there we go. Put it back in log mode, and there's the levels, 1272 and 1618 right there. We're stopped at the 1272. That's kind of what I would expect. And then 335 up there at the 1618. WM, Waste Management, showing a little bit of bullishness potential. Still below this. If we can pull this down to the lowest low. If we can break out above this consolidation right here, that's going to be bullish for Waste Management, 183, 192 on the upside. All right, SCHN. It looks like she's going down. Schneiser. All right, that was all the stocks race, getting a nice pop this morning. Be careful, that one can pull back. We're at the extension, the 1618, finding resistance right there over and over and over and over. We did get a little pullback here. We could extend just a touch, maybe up to 279, but eventually we're going to come back and retest the roadmap line. We haven't done that since it broke out higher here. It came down a bit shy and then rallied off. At some point, it's going to come test it. So watch out for, if you're long race, make sure you put in your stop there on your Ferrari. All right. FedEx getting a nice little pop. If we can get out of this consolidation move, and we may see a pullback here. This is on this pullback that bounced off the roadmap line here. We're getting to the extension at 234. We may see another pullback before we can break higher. On the bigger pattern here that we pulled back, we need to get above that orange zone right there where we topped back here in June to get some higher targets. And I got a bunch of crap drawn on here, so we're just going to remove all this stuff. So to get even higher prices, we've got that resistance. We've got to break up through right there where we topped out last summer. J&J, nice pop. I saw some headline. Yeah, they're settling the talc powder claims. So we've got a tentative deal to settle that. Breaking out above the roadmap line is bullish, otherwise still bearish. And it hit the target down here, so this can be the bottom. Like that was an echo. That's why these two big blue arrows, this move down and this move down, echoes of each other. Not perfect, but close. Reversing out of here sets this on a path to go higher. Finally. They've had this pending litigation over them for a long time. 196 on the upside. If they can finally break out of this. BURU. That's a sloppy chart if I've ever seen one. No attention, then all of a sudden volatility, and that doesn't look like bullish volatility. Be careful on that one. Electronic components there. Not sure there's a play there. LML, yeah, LMNL. Biotech popping up. Probably going to retrace, looks like. Went from way down here to way up there. And looks like they probably did a reverse split to stay listed. That's kind of bearish. So, I hate to say it, but that looks bearish. Even though we popped up here, right to the prior high, probably going to drop out. This thing makes monster moves, so be careful on that one. AZN, AstraZeneca, another pharmaceutical. Didn't see any news on that one this morning, but looks like they have some positive drug news and popping. So breaking out over the highs can be positive for extensions on AstraZeneca. What kind of prices? Let's run this really quickly. Yeah, breaking out looks like 74 and 77 on the upside, potentially even up to 84. And we're right there at the breakout level this morning. So bros, Dutch bros, never even heard this. Little pop, still below the roadmap line. That's still bearish. I wouldn't really get involved. It may move around, but be careful. All right. Opening down, yeah. Hey, Arthur. Yeah, ES opening down a little bit. I see it. And NVS, Novartis, getting a nice little pop, breaking out above the levels here. Extensions out to 96, 101. But we still have that consolidation of the highs. You know, we've made highs here once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, almost 9. This will be the 10th time trying to get through this area. Got to get above 99, you know, back above 100 to get any kind of move going. Otherwise, could have downside volatility. Novartis just going sideways, being capped in by that $100 price. If we can get above 100, Novartis can go higher. Hadn't really ever been higher than 106. Looks like. So, watching that one. And Dutch Bros is a good coffee place. I'll take your word for it. I'm a monster drinker. I don't like hot liquids. I don't know. Soup, coffee, tea, you name it. I don't like the hot liquids. Anyway, FLNC just kind of going sideways. That doesn't really look like any kind of breakout or opportunity there. Even though it was making one of the biggest movers of the day. I don't know. AU, now that one, that looks like an opportunity. Be careful at 27. We get a pullback there, back into here. If it does this right here, that's an opportunity to go long for a move up to 30. Yeah. All right. Yeah, Kimberly's the coffee drinker. All right. ALB getting slammed, dropping out. And looks like that's what we got this morning. That's the list. My bias for the day, cautiously bearish here. It looks like we're going to get more pullback potentially. We could come back to where we broke out above these. Come back. Zoom this up a little bit. Let's go to an hourly chart so we can actually see it. We may get that little pullback right back to the blue zone and the roadmap line here on the hourly, right down in here, around 40.80, like I was saying on the big chart in the beginning. That's the bottom of the channel. I don't have the channel drawn on here. We could probably put something on here. I'm looking for this channel line, kind of hold the bottom of that channel so we can see something pull down in this zone right around in here. All right. Any questions? Yeah, we were doing so good, but you can't go like this. Was straight up for a number of days, with barely a pullback. We have to get some recharge, and the money has to rotate. So I know we'd all love it to keep going up forever, but we can't. We gotta reach. There's got to be retraces. The more straight up and the more headstrong, bullish, straight up it is, the bigger the correction is going to be at the end. So always be careful on that. Keep it in mind. These were actually quite productive, and you can see we built up the energy to do that monster run right there, right up to resistance, pulling back, We can bounce right off the roadmap line on the hourly. We did it back here. We pushed lower a few times, but we did it right there. So we could do that again and extend higher. But we need a little more downside, I think. Need a little more energy to get going. All right, that's my bias for the day. Kind of downside a little bit. Cautious. Please be careful. We don't really have any big economic news coming out today, so we're at the whim of world news that might come out. All right, continue the conversation in Discord. If you want to come join us, links in the description. Remember, hit the subscribe button and the notifications to get notified when I go live again tomorrow morning at 9:15. And I have an event at 1 o'clock. Here's the link in the chat. If you want to come join me, go put your email in there. Like I said, I'm a guest for somebody I've never worked with before, so we'll see what happens. Have a great day, everybody. Be safe out there.